Like Jim or
Good morning, everybody. Good afternoon to our friends in Europe and beyond. I am Mark Sebastian. I am your only option, and welcome to the Ticker Highlight Show. Reminder: every week, the four of us, me, Andrew, Hans, and Leisha, we get together with you. We share our best short ideas, and then we kind of settle on a trade and do it.
Do it.
So, again, I'm Mark Sebastian. I'm the founder and CEO of Option Pit. I'm joined by one Andrew T. Giovinazzi. He is our director of education, the president of Option Pit, and a professional volatility trader. I'm joined by Hans Albrecht. He is our director of income trading here at Option Pit. Just a all-around king of the turbo trade. We love him. And of course, last and certainly not least, the queen of the candles. I just call her queen. She is Leisha J. Leslie. She is our charting expert. And I'll tell you, Leisha, you those that got into small account challenge are already smiling big. Nice work there already. It's nice when a good plan comes together, but one down, many more to go. Very excited for my small account challenge members and Leisha. So, with that in mind, let's kind of dig in, and I want to share I want to start with my bear idea. This is maybe more of a long-term thesis, but I got to tell you, Target. Look at the 2-year chart of this thing. And then you can even go back to the 5-year. And this thing is in a slow walking death. They've botched just about everything. Remember the cachet around Target's clothing and the stuff? It's not Target, it's Target.
Yes.
Nobody says that anymore. They've cheapened the brand. 2, they completely fell flat on the online shopping experience. You go to Amazon and Walmart, you're getting a pretty seamless online experience. Walmart Plus is, nipping on the heels of Amazon in terms of how much they're doing in sales, the growth there. Much of the value in Amazon is really based on the server side and everything like that. And that's because Walmart Plus has been a big success. They poured money into it, lost money early, got punished for it, right? Walmart was one of the most hated stocks for a while. But then, look at it. It was basically dead money from 2001 till kind of end of 2023. Just absolute dead money. And then look at the growth that this company has now had. It's up 100% since 2024 began. This is Walmart up 100%. It's not Amazon, it's not Nvidia, it's not some high flyer. This is sleepy old Bentonville, Arkansas based,
which is awesome.
Yes, Bentonville, Arkansas based Walmart. And while Walmart has been doing that, Target has been having a slow death, and it's all been the investment in online and Walmart doing a better job of building its brand. You go into a Walmart, you go into Target, they're really not that big of a difference in experience anymore. So when I look at Target, I see a slow walking death. Near term, you can see they just came off of earnings and it continues to drop. I think this one is heading for sub 90s and maybe into the 70s. It looks terrible. I'm looking forward to Leisha's chart. On my long side, I was looking, this isn't really a long, but it kind of is. I was looking to fade volatility. And the movement in option prices relative to how much the market is moving. Options are cheap. I still think there is going to be some downside pressure on volatility. And I was liking VXX lower. But when you expect VXX lower, that's basically kind of a bull play. Being bearish market volatility is essentially a bull play on the market overall. Now, we all know the long-term trajectory of names like VXX, right? 5 years ago, it was split adjusted worth about $1,743. It's currently $37. If I know we've got this tariff thing that is we're going to kind of dig into tomorrow or Thursday, but I think it's probably overblown, and you can see the market already starting to relax a little bit. And we get through Broadcom earnings, we get through non-farm payrolls. There really isn't a lot left out there until we get to the Federal Reserve. And post non-farms, I think the Federal Reserve's decision making is pretty much going to be set. And that is that will allow for the market to probably see a reduction in the VIX, which would mean VXX would be going lower. Don't love it as much as I loved it on Friday, but I still think that thesis works, but maybe not until after non-farms. Maybe it's kind of a hold off this week. I wrote it on Friday. It's okay to let your thesis change from Friday to Monday, folks. And I think that it's worth holding off on trying to fade this VIX move until this VIX move actually starts to fade. And that may not happen in earnest until we get through non-farm payrolls on Friday morning. So that is what I am looking at. So next, let's kick it over to Hans, our Imperial Overlord of Income and Master Income Trader, head of the Turbo Trade. What do you got for us this week, Hans?
Good morning, Mark. Good morning, traders, and good morning, everybody watching. So, yeah, we got a little squishiness out there in the AI space. I think we're seeing the NVIDIA earnings were really good, but not like blow it out of the water. A little bit of weakness in data centers, and that's got everybody sort of a little bit worried on top of China's new chips and a little bit more competition there. And so, that game is really kind of spearheaded by the US, but China is not going to sit idly while the US, pulls ahead in the AI game. So a little bit of worry there. I'd like to see overall, I'm seeing the growth versus value. It's one of the charts I like to look at. That's a little bit sort of weak here. So I need to see that relationship get back above the 20-day before I get a little bit more constructive on that growth AI theme again. But I think it's coming. I'm not worried that this story is nowhere near over. So that is my sort of overall view. I think the broadening out can probably continue in the meantime. I think we do get lower rates at some point. But again, as Mark mentioned, this tariff situation is throwing us for a bit of a loop here. I don't know if it impacts Powell. I mean, it may impact yields and longer term yields. And so we don't want something to break as it did last year. And there are ways to trade those kinds of markets. And so stay tuned. We're going to be talking a lot about that at Option Pit over the next little while as well. So we want to make money up and down. So my names, Mark, one of my names that you might be surprised to hear is Salesforce CRM. So when I did the Special Situations AI event, I don't know what it was, maybe 6 weeks ago, maybe even a little bit longer, I gave everyone 4 names that I thought would do quite poorly. And one was Upwork, Fiverr, Adobe, and Salesforce. And they all got crushed into a tech market making continual all-time highs. So those were really kind of timely decisions on those names, but we're starting to see a little bit of bounce back. And I've actually gone long this thing. I went long it in the 240s. I think there's some structures that look really good here because I think this is going to be a very interesting market because there are going to be some big winners. There are going to be some losers, but there are also going to be narratives that maybe push things a little bit too far. And I think that's going to create some great opportunities for us. I think this could be one of them. Everyone's worried that AI is suddenly going to mow the lawn of companies like Salesforce. And I think the problem with that thesis is that that may be true over time, but it's not true right away. And so we've got earnings coming out, I believe tonight, Mark. So, but I think it's way too early. I mean, put yourself in the position of a company using Salesforce. they are not going to sign up for $20 a month ChatGPT and go, you know what? We're going to take care of this entire enterprise CRM business with AI. It's just not going to happen. You need to trust your system. It's very much an ingrained part of the tech stack in many companies, and that is just not going to happen overnight. Will it happen over time? Yes, but that is going to give time for companies like Salesforce to actually pivot and figure this out a little bit. Margin compression probably at some point will happen, but these guys are nowhere near dead. And I think that's what we're going to see in the numbers tonight. It's going to be like nothing really to see here at this point. So I think this is actually an interesting play as they've crushed software over the last few weeks. I think they've overdone it in some areas because, of course, everyone's anticipating this big disruption that it simply can't happen over a couple of months. And these guys are going to have time to sort of adjust. The name that I don't like is C3AI. So apart from their ticker, which is AI, which is like, how good is that? I don't know how they scored that, but that's about as good as it gets for a ticker symbol. And this is kind of the poster child for a company that is supposed to be in the business of helping you figure AI out, right? So like a Palantir or Snow that are doing this very, very well. These guys are not doing it very well. So much so that the CEO came out and said, our results were completely unacceptable. When do you hear that from an AI company? So they just don't have that deep kind of lock-in in the industry that some of the bigger companies have. And I think they're probably in a little bit of trouble at this point, burning cash. Burning cash is okay, but you better be heading the right direction. And I'm not sure they are. So it's an AI name that I would not get super excited about.
Yeah, AI looking terrible. They've got earnings after the bell as well. Looking at earnings after the bell tomorrow, earnings expectations, AI, they're looking for a kind of a smaller than normal earnings move. And CRM is actually looking for a bigger one. The market normally prices in about 6.35%. Currently, the pricing at almost 7.6. So you're seeing some real interest in what CRM is going to report today relative to normal. And C3AI a little bit more kind of a kind of trading into those earnings. So I think it's one of those things where maybe the AI is so big that even a blind squirrel is going to find a nut now and then, right? So maybe it's some sort of trade in there, but they're clearly not doing things correctly. And I think it's just too easy to focus on companies that are actually doing things right. So I'm just, I'm meh. I'm a little meh on that, but we'll see tonight. Be interesting. Yeah. So you've got C3AI tomorrow, and then CRM is tomorrow night. So both of those are going to be interesting to watch. So stay tuned on those two. All right, now pivoting to our own Viking of Volatility. He is our director of education, and he built a chicken coop this weekend, folks. He is our own Andrew T. Giovinazzi. Andrew, what are you looking at right now?
Well, I'm staying on the restaurant theme of stocks I don't like. Again, I'm seeing favorite restaurant in the world, Portillo's. Every time I go to Chicago, must eat there. Okay, but I ain't buying any more stock. It's sitting at $7. Now, I already said that was a short a couple weeks ago. Then I like CMG. All these big, I would say commercial restaurant chains, I think are getting squeezed. Squeezed by labor costs, squeezed by food costs, squeezed by people coming in, level of service and everything, not great. We won't even talk about Olive Garden. I think that's Mark's perpetual short. But what's hard is Blue Dog, so tired of Portillo's. So eating it or the stock? The stock, I am tired of it. I still own I don't
Yeah, I know. Don't get me started on owning Portillo's. That's been the.
I still own some. But I haven't written any more puts in it.
Yeah, I killed it in Reddit, but Portillo's has been the bane of my existence.
Yeah, Cracker Barrel.
Mark, is your hedge to being short Olive Garden, actually
Blue
eating
Dog,
at Olive
pins or
Garden?
Etsy?
That would be a good hedge.
I closed the Etsy for like $65, Blue Dog. I already posted that. But you
Yeah,
must
I would sooner go the hedge the other way, going long calls in Olive Garden and not eating there.
Yeah. So as far
and
as
losing money on your calls.
Cracker Barrel goes, again, I don't, and none of this has actually been good for them. You know, that people are posting like, anyway. But what I would say, just a couple of things here is, normally you would see some kind of, some profit taking here, but the stock volatility is still higher. And I just FYI, like, so normally when, you have this, okay, there was news, bad news, and the CEO fixes, says, oh, I'm sorry, we did, usually you would see the volatility options start to come down. Folks that have sold it want to take their money off the table. But right now, volatility is, I don't know, 6-month high. So that's why I say I think Cracker Barrel is the stock to avoid. I put it out as a short last week, and I caught like a good level on it. So I would not touch this stock with a 10-foot pole, especially, again, I haven't seen any good press on it. And all of these names, all the margins are starting to come, all the multiples are coming down very large, huge in here. So that is my short. My long is one here. Again, if you read the pit report, I don't know if you read my pit report. If you did, say something in the comments and said, hey, Andrew, I read your pit report and I like it. Or you could say, I don't like it. APA, probably one of the best option trades I saw this year, fingerprint wise, was a customer bought. Yeah, it must have been a small one. They've been buying the 20 level calls since $1. $1. Started buying them in bulk in April. Literally the bottom. This is a stock that, and now they're trading $6 and they're not selling them. Again, this is a stock I added to Flash 5 last week. I thought it was a good opportunity for my students here. I am fairly long. This is my longest long for an oil company. They're making, it's a profitable company. I can't figure out what the problems are, but it's still rolling. So anyway, that's what we've got. And this is my long. Now here, another one, let's taking a look at volatility. This is the opposite, right? You've got extremely low option prices, extremely low. Great bullish scenario, right? What is that scam we used to have, Mark, where we were looking for 52-week highs and super low option prices? You've got option prices are about as low as they have been in a year. So, again, I love seeing low option prices in stocks that are going up. And again, I like all of the oil complex, as the Trump, we'll talk about this in capital gains, but as the administration moves out of solar and wind, and they want to make sure that we're producing oil. So for exploration companies, that should be good. So, but also super low vol, great prices. And I am fairly long this one already. Just saying.
All right, so there you have it, APA. I like this one. It's been on a tear here, so I'm interested to see what Leisha sees in the charts, and so which is why we pivot to our Queen of the Candles, otherwise known as the Queen. She is Leisha J. Leslie, and she's gonna share her ideas, and then we'll chart out our kind of some of these other picks that maybe caught her eye, because I know she was diligently looking at them on the charts as we were discussing.
Yes, I was.
Yes.
Good morning, everyone. My stock to rally is Walmart. Look how well it has held my support level here. Nice little doji confirmation. Now we do have the 50-day just above here as a little resistance, but I think Walmart wants to come back up here over these highs, 102.68. So I like Walmart. My short was Hood. And now it's trading below support and below the 50-day, which would be a nice stop loss there. There will be a little support here, 93.99, which is, I'm sorry, 93.33 will be almost $9. And then below there, 92.5. But we got to watch it doesn't doji out on us here. Those are my two choices. Andrew, I think APA looks really good. I just added a higher pitchfork to trade higher. I think this 27 up here could become a nice target.
Well,
It has had a good run. Maybe we wait for it to pull back a little bit. But that's, 23 to 23.58. I think it's okay to probably hop in there.
I like the hood.
Good. I'll keep closing my eyes and holding what I'm long. Just like, okay.
Target. You're right, Mark. Look how well
I agree
that
with Mark's
low,
thesis on that one too. It's kind of, they've lost their way.
that low in April lines up with my pitchfork low, which I really like. We did not hit the top of the pitchfork here in target. It's trading below these. This is support here, this previous low. It's breaking beyond that. 92 and then 87. I like target short.
I almost want to do a pair long Walmart short target as a package.
That's a great idea.
Just because Walmart's kind of the opposite of Target, and it's an interesting idea.
Hans, you're right. AI is looking weak. It does have earnings, so we probably wouldn't put a trade on there. CRM, look at this convergence here of support and resistance in CRM. It does have earnings also. I think this thing's gonna either fly 275 or really collapse 225.
Yeah, it's kind of rallied $30, so it's building in a little bit of a less negative story.
Yeah.
Yeah, I'm be very interested to see how that one moves, because
it's been hated for too long. I mean, it's literally the lows of April that every other stock has gotten away from. It retested just.
It's going to be a bit of a tell for this whole AI is eating software narrative. So it's going to be very interesting to hear Benioff's been saying this isn't a big deal. So I don't think he's going to be anything but positive, but it'll be interesting to hear the details.
Yeah. Hasn't gotten out of its own way though. Am I missing any others?
Walmart options are really inexpensive.
Cracker Barrel for Uggy one, Alicia.
Oh yeah. CRBL?
Yep.
It's a bit like my Darden
CBRL.
My Darden negative idea a few weeks ago, Andrew, which is just kind of gone sideways. But I thought, that mid-range restaurant is in trouble a bit.
I think they're going to be under. It's not a stock you want to own right now. If it's kind of, I'm just telling you, if Portillo's actually put up good numbers and they still don't care. So
why is that?
It's all those New Yorkers hating on our delicious Chicago food. That's my theory.
NVIDIA and AI and whatever. So it's one of those things.
Wait, Mark, the New Yorkers don't want to let a Chicago Italian restaurant succeed.
They're out to kill Portillo's because they're jealous of his delicious food. I'm sorry, for those that love Cava, the Portillo salad is a million times better than anything you're going to order at Cava. Just remember that. That chopped salad
what's
is the best. Alicia, I like your Walmart idea and I like my Target idea. I kind of do want to do these as a pair, but I don't want to confuse people too much and throw too much off.
What was your long, Mark? What was your long?
But I want to hold off on that one. That's
we're not doing that.
Yeah. So
on the bus today, we're not doing that.
Yeah, we're not doing that. I'd like to look at. I like your Walmart idea, and I like the kind of push there. I think that's a simple and easy. I may do the other side of the Target thing, but I don't know that I'm going to put that into a. I don't think a pair trade is gonna. I don't want to throw people off of the pair trade, and options are not expensive in this thing.
My mom and dad live in a small town, like 12,000. Walmart, there's Harps. There's a little grocery store called Harps, and then there's Walmart Superstore. They have a lot of great food options. Lots of organic, lots of wild caught frozen, but lots of wild caught fresh frozen fish. They're stepping it up. They have a lot of good options and things you wouldn't think you could find. They have them at Walmart and they're a small town.
Yeah, absolutely.
Interesting.
Yeah.
Yeah.
I think Walmart's, like I said, I think Walmart has it right.
And it's just got a touch of defensiveness to it, Mark, which is just maybe his growth slows here a bit.
Oh yeah, and they are kind of open to tariff issues, obviously, but their ability to buy and scale eclipses even Amazon, right? Because they're actually stocking stores, and each of those. And what I love about their online business is how the stores almost act as a warehouse, and they're selling out of the front end and storing in the back, and so they're kind of getting much better use out of their space than I think that adds a level of efficiency that you just don't get even with an Amazon, as efficient and well run as Amazon is. So
I'd make our target price 100.
Yeah. I'm looking at the 98 calls for September. They have 3 weeks. They're $1.35. We just get to Leisha's 99, 95 right there, and I'll be out of those calls already.
Mm-hmm.
So we don't need a lot of movement. It's office support. The options are cheap. We already know Target stinks, and Walmart is a safety pivot play. And I think there's some real upside here. My only debate was, do I go with the 98 calls or the 99 calls? They're both inexpensive. And I'm going with the ones that are a little closer to the money and so I'm looking at the September 19th, 98 calls in Walmart. I am going to drop these into the free portfolio.
Are we doing both?
No, we're just going to do the Walmart. I'm going to do the other side in my back end. I'm going to do the other side myself, but this is not a pair trading service. So I'll throw those in. Update. Almost closed Google last week. USAR, I'm staying the course. No changes there. So that's where we live now. I'm gonna get this.
WA, the other side would be buying puts in Target.
Yeah, doing the other side of this would be, yes, buying puts in Target and seeing where that takes us. So I have dropped in the trade. I will put in the announcement below us. Not going to do a push. Not going to do an email. So everybody here live can see the trade and follow along. All right. So, so there you have it, folks. We are going long Walmart calls. We're buying the September 19th, 98 calls for about $1.35, less than 140. And I'm targeting $2.50, $3 to get out of these. Obviously, if we get a big pop tomorrow, I'm just going to take the money. But if it's slow rally, I think we'll be out of this one by Friday. I'd like to close up before non-farm payrolls Friday morning. So I'm looking to try and exit by Thursday. And there you have it, folks. So there is our trade, and then Target we like as a potential put buy, but we're not going to do that side of the trade as well. All right. So there you have it. There is our trade for this week. We'll be back Monday, our normal day, next week to break down another trade. We'll update you on these ones and inform you on the market. So make sure you're here every day at 10 a.m. Eastern time, because tomorrow we're going to be back at 10 a.m. sharing what we're seeing in market state of the market. We're going to be talking U.S. rare earths more this week. We'll be talking energy. We're going to be talking tariffs. Folks, the three biggest headlines those are the three biggest headlines on CNBC. There is a headline that you don't know about that is underneath the radar that is going to be bigger than all those, that is going to develop a trade here that is going to be a mammoth one for myself. And again, if you're not a member of Leisha's small account challenge, what are you doing? Why not? I mean, we're basically
Steal.
It doesn't make it's a steal. It doesn't make any sense. So all this stuff was done while I was on vacation behind my back. They did all this pricing stuff. And I was like, what the heck? So
Is it like stealing money from the market, but legally?
I mean, yeah. I mean, if you look at Andrew did a 2-lot on her first trade. Andrew did a 3-lot on his first trade, and his 3-lot would have paid for basically paid for the entirety of the 6 months subscription.
How much did we pay for those? $127?
126.
Yep. Made $100 a contract.
Yeah.
How much
So-
was the service? Oh, that's right. I didn't have to pay for it at all. It was free.
I know
They
you
just
get it
gotta
for
do
free
everything.
because you're the boss. But no, I mean, it is just super inexpensive. Click the link here to join if you have not yet. There's still time to get in. You've missed one trade. Don't miss the next 30 of the next 30 that are going to come up over the next 6 months, because you'll be sad. And that guarantee that Leisha's put out there is absolutely rock solid. So again, join us. So for Hans Albrecht, our Imperial Overlord of Income, the head of the Turbo Trade, Andrew T. Giovinazzi, President, Director of Education, and of course, your Viking of Volatility. And of course, Leisha J. Leslie, Queen of the Candles, and our Queen. I am Mark Sebastian. I am your only option. We'll see you back here tomorrow at 10 a.m. Eastern Time. Join us then. Have a good one, everybody.
Have a good day.